Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Tuesday, and today was a pretty drastic day. So lots of conversations happening across the board. Was today, or is this two-day period the start of a 10 to 15% correction? Is this the same as 2007, 2008? Is the Fed done? Is the free lunch over with? You know what? Nobody has a friggin' clue. And if they say they do, you know what? You probably shouldn't be listening to them, because you never know where we're going to go. You never know what the actual roadmap looks like. You have to just judge it along the way. And there are key things to judge along the way when you're trading certain trends. Okay, I know for us, I talk about the macro trend, the intermediate trend, the accelerated trend. I talk about what time frame are you on? Are you a macro investor where this should be exciting because finally you can put some new money to work, and if we go lower you'll even get a better average cost because in a few years from now you'll probably be fine the same way you were in 1987, 2001, 2007, whatever. But if you trade for P&L, you trade for cash flow, and just say you've been rolling up shorts. I know a lot of people got squeezed out on Thursday as the market pressed through highs, extending all the way from the 8-day, which is a spot that guys like us do not chase. I don't care what anyone says out there in the Twitter sphere. We do not chase scenarios when they're so extended from the 8-day. And we try and stay in portfolio approach when we're above the 8 and the 21-day. But you have to be quick on your feet, and when you do trade momentum, you have to know your levels and react very, very quickly. You know, in order to make 3 to 5% in a day in some of these key stocks, or 3 to 7% in a 3-day move, or playing breakouts, you have to know the rules when the rules change. And that's when momentum leaves. That's when relative weakness shows its face. And that's when you have to honor your stops and get out of the way and say, you know what, I'm going to wait. I want to see what's next. I'm not just inking trades where I have an endless amount of cash or endless amount of ink, you know, until I'm finally right. I need to trade in my risk tolerance. I need to know if I'm short early, where I'm going to be stopped out, and then maybe be right but be wrong because I'm not involved. Or if you're going to be, wanting to be long and buy a dip, if you start buying too early, chances are you start buying too early, you're going to get stopped out, and then wherever it is you were trying to buy could rally a day or so later, and you probably get left out in the cold. So you have to know, what are you looking to do? Who are you as a trader? What time frame are you trading? Can you trade multiple time frames? And can you mentally separate them? So with all that said, yesterday we had a down day. Probably a time, if you looked at high beta tech, to take some risk off. Maybe not get out of everything, because yesterday didn't give you really the clues to get out of everything. You can't get out of everything on the first down day. Maybe you could lighten up. Maybe you could be on guard the following day. And what I don't do is on the first down day buy a heck of a lot of things on a first potent down day, because you don't know if day 2, 3, or 4 is going to happen. But there are ways to navigate. And if you look where the S&P is right now, you look at the chart, look at where this is when everyone was saying the market's crushed, the market's going to go down 10%. And what happened here? This was your day that you could have got involved pretty heavily in the market. And then when we broke out and closed above 1902, that was your confirmation. From there, quick move, broke the 8-day here, did not touch the 21-day. Had a few days to regroup. What did we do? We negated this bar, okay? It took it back, so you had to get short off the brain. Then we made a new high to then have another outside day, a day to take some risk off, because you never know what's going to be next. What was next? An engulfing day before the next day when we took out that and closed higher before new highs. And then yesterday you had, a day that pretty much engulfed the jobs number, which gave you some reason to get out of stock, but not reason to run for the hills. Reason to just maybe take down some tiers. If you were in some high beta names, you probably saw that they acted a little worse, so maybe you cleaned up on some upper flag breaks. And then today, this is what took place. So we went below the 8-day. We held above the 21-day. If you want to look from here, okay, maybe we could draw this line too. There are some different trends here. As of right now, this trend line held, okay? But if you go from this trend line, pretty much broke, okay? So I would say if the bears want to have some type of control, Alcoa came out after the close. I think it's up. They don't let the bulls close this market back above 1968 to 1972, because if they do, chances are after a day like this took 1 day, this took 2, you engulf it and then we continue in the trend. And who knows? We're not very sure. I do think that this 2-day session that we just saw was a little bit more severe than this one outside day. Of course, if you look at just say the Russell, okay, the Russell definitely gave you some reasons to be concerned as well. Yesterday, it wasn't game over because we broke this upper flag. If you've been long since you broke above this descending channel here or cleared resistance here, you're not going to get out on the first time it breaks here. Maybe if you were in a tier 2 or tier 3, you do. Okay, or if you're just an active trader hoping, like on this day, saying, okay, you know what, market looks strong, looks like we might break above this previous high. So far, so good, above the 8th day. If that's your thesis, then you get out on this day. Then you get out of the way and say, I want to see what's next, and you don't get caught in a day like we had today. But now if you look at this, okay, this is one trend. Oh, I didn't even look at that little trusty thing. Okay, which we broke below, and we're below the 21-day, and today we put in a new point of reference. So the question is, what is next? Can we get some type of bounce? Some people are already saying this is going to be a head and shoulders pattern. They're already drawing this, the left shoulder, the head, the potential right shoulder, which could be, because that means you have a little bit of a bounce up and then it gets negated right here at the 8th day, and then you have a bear flag, and then maybe even get a nice tradable short from here. Okay, you don't know, but that could happen. But I'm just saying, these are things that you have to think about as traders. What are you thinking? What's next? If we open down and hold today's low tomorrow, do we buy something for an oversold bounce? If we open higher into the 21-day, are you looking to short a bounce and knowing that it might get a little higher? So you have to start thinking about if-thens. But overall, the trade that was pent up kind of changed. Otherwise, remember this day? This was that same outside day, okay, where you had a day to take notice, a day to get rid of some longs, which was right here, which we do not chase days like today. That day we sell as it reverses, and then all of a sudden you had an open lower, held the 21-day, traded back above a prior low, and that negated the severity of that. And then, they wound up making new highs. So if that was the case, that probably would have happened today. It didn't happen, so a small change. It wasn't strong enough to do that. So that means you tread lightly. That means you take trades. That means you're looking long and short, because you don't know what's going to take place here, except for that this accelerated trend has now been broken. If you want to, let's take a look maybe a little bit, smoother, okay, because that's what we do sometimes. You look like this, not even close to that trend. You look maybe from here, that trend is still intact too. But if you do trade for P&L and you can't handle pain and you trade from day to day somewhat, there's your stop. The stop was right there, 118.89, or when it broke below the 21-day. And now we'll see what happens next. We'll see what kind of rally we have in the next day or so. I think the oscillator went from, I think at the highs we were plus 40, now we're minus 35. Extremes are minus 70. So don't be just buying because you think we're that extreme. We're not. There's room to go to the downside. Plus, sometimes oscillators are a little skewed because we've been rallying for so long. So anyway, a lot of other sectors look kind of the same. A lot of things came off the lows and broke upper trends. And we're in a little bit of a wishy-washy land where things aren't tight anymore. Things aren't just breaking out and trending. Now we're caught between different trends and different time frames. We talked about the weakness in Tesla. That started here. Okay, and there's always signs when you trade momentum. Hopefully, if you were long from here and you trailed it, you get out here. Okay, if you were long on these 2 days, maybe you got out sooner. But overall, this was your area to get out. Today, I talked about a little bit of a strategy, maybe into the 216, which was the prior breakout. It wasn't clean. It was definitely hard to trade, but it did close above it, so at least maybe you covered into that, and now you see what's next. Maybe we do rally into these moving averages. It closed well off the lows, so entries and exits do matter. If you sold here and you bought some a little bit today, we'll see what happens tomorrow. I traded it and I did not take it home, but ultimately it did give you a sign that the momentum wasn't strong, especially on this day when the market went up and this went down, and we don't like when stocks like Tesla, that the momentum names that should be leading, lagged. Facebook did the same thing. Okay, look what happened here. We talk about trends, right? From here, there is a trend. Here are two trends. So if you were trading it short-term for alpha and you were looking just to trade actively, you probably looked to short. When it broke below 67.39, I pretty much was done being long it, didn't trade it for these days. And then today, I did test it long and lost a little bit of money because it was upgraded, showed a little relative strength, and then when it failed, they got out of the way. Got out of the way when it was down like 30 cents, not down 240. And look at this trend line. This broke. This upper area broke, so if you trade things very tight, that was one sign to get the hell out of Dodge. And then this was another sign, if you got out of Dodge, maybe to get short. Or if you were looking here to get short, or here. So there's a lot of things to look at. Okay, and there were definitely other trades along the way, and that was to the long side, from here. And I know a lot of guys were screaming short, I'm short Facebook, I'm short social media. If you were short from here and you rode it all the way up, unless you were just using ink, hard to stay solvent during a move like that to the upside. You had to time it technically, and we can time things technically. I know LinkedIn also, I tried to be long that thing many times, and I lost money, but I could have lost a heck of a lot more. Okay, I was long here. This is where we did the chart. Okay, looked tight. Looked like you could be a buyer 170, 171. Got wishy-washy. Then what happened on this day? This bull flag above the range that looked decent broke right there. Okay, that was your exit. That was when we closed below the 8-day. That was your, okay, we're not going up. Some of these things could be in trouble. It's also a laggard because it is a laggard. It's been in a downtrend and hasn't been able to break a real downtrend in a heck of a long time, and it's below the 200-day, so technically that's not something you should have on as a macro trade. The macro trade was way back when we talked about it at 110. So anyway, this was just a retracement type of trade that has been a good one for us since this red dog reversal right here. So I know some guys out there, if you've been shorting it from here, I don't know if you could hold this thing 20 points against you because you never know what's going to happen. So stop claiming victory or whatever. But if you got out here, you avoided that. And if even you didn't get out there, you had to get out of the way here. Look at this ascending channel that got crushed. Once it broke the 21-day, get the hell out of the way. Okay, now it's down here. If you've sold here, maybe we get a little tactical trade, but at this point it's different. It's broken. A lot of these names now are broken again, and use little red dog reversals. Maybe we'll use that tomorrow here at 155, and or an H setup. If it rallies back and can't get back above more than a third or half, you sell it. Same thing goes for Yelp. Yelp was a decent trade off the lows, and then you had a bit of a topping tail here into that excitement. I think some guys got out there, or you had to get out yesterday. When it broke the 8-day, you get get out of the way. And then if you didn't, right here at the 21-day. But overall, timing-wise, it was a good trade from here, right? A good trade when it broke this little descending channel, or when people getting involved here, it gave you at least some action there. But if you were short here or short there, chances are pretty hard for you to hold through there, unless again you're not using real money. But anyway, let's move further. Google talked about not buying the first down day yesterday. Thank goodness, because you never know if one down day leads to another. And since some things were breaking its upper area, why be in a rush? And this showed you how it wasn't ready to break out. If you were trading it for some type of bull flag continuation there, it changed on this day. Didn't give you a blaring change, but it gave you a little caution. Okay, a little caution sign, especially if you were riding it since it broke this descending channel here on the retest, or cleared there, or cleared here. Lots of nice trades along the way. So if you were trying to stay with it as long as it stayed above the 8-day, you at least were on alert. And then today, once it broke below it, you had to get out quick. And now we'll see what happens. Kind of came into the prior breakout, holding the 21-day, but the trade is now different. This move lower was a lot different than this 2-day move, but we'll see. We got to wait for earnings, I guess, now here. Netflix also broke its upper area, right? This was your upper area right there. So once it broke that, if you were a momentum trade, you got out of the way. If you were looking for your first cute short, you got it. And then if you were looking for another short into the gap, there you go. Now it's at the 21 days, so we'll see. But overall, haven't seen a 2-day move like this in Netflix during this entire move. So you notice that That means it might not be buy every dip the way it was since breaking above 350 here or above this area or above here. This is 2 big days. It's going to take some time now. Doesn't mean you can just blindly short it because you're into support. You're at the 21 day, which it hasn't seen for a long time. But if you got out here, maybe there's some tactical opportunity, and that's what unfortunately we're going to be looking for now is tactical opportunities, not riding a trend, because this trend now changed and we don't know what the new trend is. So you got to figure that out. Bank of America I got stopped out of today. I was hoping it would hold the gap. I was in a long from here. This held the gap into a lot of noise, went up, retested, gave you another trade here. And for this to be super duper strong, I was thinking it would hold this gap. It didn't, so I got stopped out. But only on the leftover trades. It wasn't fun, but it happens. I guess I didn't really respect this topping tail because it gave you a topping tail to show you. On this day, I figured, oh, maybe, too far, too fast. Let me give it a little bit more time. Yeah, this day thought, okay, it's hanging in there, and then that happened. So now it's at the 21 day, but I'm just going to get out of the way for a while. And if you're looking to be short a bank, we showed you this morning how JP Morgan was the most relatively weak one out of the bunch, and this is well below the 21 day, and it's already at the 200 day. So not a candidate to be long. Earnings aren't until next Tuesday. ISRG, we talked about how you should not be in something that breaks out and fails, and that's what happened right here. Okay, you had a decent catch-up trade from down there, and then it gave you a follow-up trade day 1, day 2, and then on this day, if ISRG was going to be strong and continue to the upside, it should have held at least half of that day. Negated the whole thing, get the hell out of Dodge, and boom. Could have saved yourself a heck of a lot of money not being in this mess once you had this breakout failure right here. Okay, and that goes to show you when momentum leaves, you do not stay, especially since we don't have big research departments behind us. We're not trading fundamental long-term news. We're trading technicals, and we trade the technicals based on our time frame, whether we're looking at accelerated, intermediate, or macro charts. So you have to know how to navigate and navigate quickly. BlackBerry actually closed pretty well for itself. I did get stopped out. I was long from here, okay, and had a really nice trade, right? This was a nice trade. Here is your earnings gap. Here is your bull flag. And then I kept a small amount, considering it closed strong. And then today, once it broke below here, I said I got to get out. And unfortunately, I didn't hold it, and I probably could have bought more and been fine. But now I'll just revisit. Another day or two in here, and then maybe we'll get an additional trade above here. If people thought it was game over on that day too, and then it got tight, and then it cleared, and you had time to get back involved. So for me, I still think BlackBerry does have the potential to get to $13, $14, $15. So now we'll just wait. No need to sit in and wait. Now you sit in and figure it out, or you sit on the sideline and wait for the next scenario. TBTs are just really gross, to be honest. Every time it tries to go, it doesn't go. I thought perhaps it could act better with economic reports getting a little bit better, and it did try to hold this gap and then gap below and just probably sliced a lot of people up, which is what it's been doing pretty much all year. Okay, bonds have been a little bit stronger, and this trend is that tried to be broken to the upside, ran into resistance right here, and now it's back down there, and it's just a nothing trade. There's not really that much compelling about it. And it's just very easy to lose money. Honestly, the same way I think it's very easy to lose money in the GLDs, where, from one day to the next, it just doesn't have follow through. Unless you got involved on this day when it broke out, or if you added here, you got hurt into that. And then when you thought it was going to break below here, if you shorted here, it reversed up. So to me, that's just not a lot of continuity. So unless you're buying every dip and you think that in 6 months from now gold has to be higher, you have a thesis, and that just happens not to be my thesis, so I'll just leave it on the side. So, in conclusion, we just had a 2-day pullback in front of earnings season. Hopefully you lightened up yesterday or sold some strength on Thursday, because we do not chase scenarios that are so extended from their 8-day moving average, which we were. Yes, as momentum traders, we like to buy high and sell higher, or we like to add in on tight patterns, but as you trend higher and you're up 4 or 5 days, we do not chase up 4 or 5 days. We like to buy day 1, add day 2, sell day 3, and cry day 4 if it continues higher, which is what happens, and I don't care. I miss it. So, you know, if you're in our community, that's what we try and do. If you had some leftover longs today, you know what? You probably had them for a while, and you made enough money on them, and it's a cost of doing business. Apple, real quickly, I came in long. Most on the VTF saw me when it went negative. I got out of it. And it was a wild ride. It actually held in there better than most things. So maybe with a little bit of sideways action, earnings aren't for a whole nother week, we get another setup. I've been trading this thing. You know, I bought on this day, added this day, sold that day, bought on this day, added this day, sold today. So, you know, you can get 3-day moves out of this. Same way back here on this gap. I think I bought in this scenario. This little topping tail got out, and I waited again for another setup. So now for Apple, I will wait for another setup as we get closer to earnings. Amazon, real quickly, someone asked me about. I got stopped out yesterday. Thank goodness. I was playing Amazon for a potential move above this, but I was also playing for it to maybe hold higher. So Amazon looked very good right here, right? Took it home long yesterday. Engulfed that day, so I said I am out of Amazon. So if you're on the VTF, you saw I wasn't in Amazon all day, and if you stayed a little bit too long, look what happened to you. Hopefully you had some time to get out of the way, and now it's right back into this support, and not looking like a whole heck of a lot of a compelling strategy. It's looking like a C- trade now, and we'll wait and see. But here it did look okay, as the market looked okay, as you had a nice trade here. Remember that day? That was a very exciting day when it teased their 3D phone. This is when Goldman upgraded them, and then this is when you had a technical buy. Could it have continued? Yes. Did it? No. Get the hell out of the way. Figure that out. And that's what you have to do as a trader. You got to know your time frame. You need to know what trend you're following. You need to know your risk. You need to know your tier size. There's so much that goes into this business. It's not throwing darts. It's not gambling. It's calculated, and you have to have a process to execute on it. So with all that being said, I hope you didn't get too hurt today. You know, a lot of our community has been leaning to the long side for the past few months, for the past few years, and that's been the way to go. And if that changes, we will change. But you don't know if that change takes place until we get more clarity. But if you're out of the way and tactical, which is what I am right now, you know, for the last, I think, 3-4 weeks, I've been having 4 to 10 to 12 positions long, and now, you know, after hours, real quickly on Alcoa, I just bought the spiders, thinking maybe we bounce, and, you know, I'm not looking for a big trade, and if not, maybe we buy versus the 21-day tomorrow. Now I'm just going to be using red dog reversal, tactical longs, and some H sell setup shorts, which I'm trying to get better at. But if we hold today's low in the next few sessions, maybe that was it. If we don't, and we don't reclaim certain areas that the bears need to defend, then maybe we go lower. And some of you guys that are announcing your 10 to 15%, maybe we go down 3 to 5, and then we'll figure it out from there. We'll figure out what if the 50-day holds, 100-day holds, 150-day holds, because right now all we did is, you know, break the 8-day, and we're still above the 21-day, and each sector has been created a little differently. So just know what you're doing. See you tomorrow. Have a good night. My fun little, I guess, soccer ball to Cajones call is Germany playing the Netherlands in the final. Have a good night.